Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the Bitcoin charts. So we talked about getting a little bit of pump and dump, or actually dump, pump, dump yesterday. Let's hold ourselves to the flame of what we were seeing yesterday in terms of key levels and zones. We were talking about coming down to a zone here and getting this pre-market dump and then pump up to here and then possible rejection of the pool. We'll come back to this in a moment, but once again on point analysis as usual. So back at the Coinbase chart, we are rejecting off of some daily support and resistance levels. A wick from over here at 48k we also put in back here on April of 2022. This rejection point slash breaker, whatever you want to call it, it's just a highfalutin support and resistance terms. And this diagonal pitch fan we've had price in for a year now, so this has been trending between the 786 and the 886 of this diagonal pitch fan. Do we continue higher? Is 50k in the cards, or are we going to retrace into the halving? Check out the 5 phases of the halving. Wrecked Capital, he has a nice little thing about the pre-halving retrace, just putting that out there. And yeah, let's go to high block. What is high block? Well, people lock that liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss, and we get to see where those crispy characters are, so let's do it now. So yeah, they basically are going to tire out both sides. That's what a consolidation is, to just steal liquidity on both ends. And so a lot of longs that longed up into this got destroyed as they came down into their stop loss. $177 million 50Xs, $178 million 50Xs, their partners in crime at 25X, all eliminated.
Fatality.
As well as if we go back in time to these 25X pools, we were talking about that $257 million pool at 48,474. Let's just go to show you how we marked that off for you yesterday's. All right, so we had this 48,455 character. We were talking about coming up to this pool and eliminating them. And sure enough, it came and cleared all those shorts out for you.
Fatality.
And now we are back at square one, down here at 46,400, as if nothing ever happened for the liquidity grab. They did take out some new highs, so they could come clear up some wicks down here if we go ahead and put these wicks on the chopping block at 44,799. Also another wick down here at 44,297. Let's go see. Oh, we can delete this guy now, or actually let's move his wick over to the high point, which was at near 49K. Pretty crazy. So we're looking at that as a rejection point as well. The confluence went there nicely. We were talking about the 48,226 for days now, it seems. So we came up to that trend-based FIV level after respecting the 236 down here at 42,114 after reclaiming it on the third and coming back up. Okay, so how high can we go? Do we go higher? Let's go ahead and expand our vision to the higher time frame pools, shall we? Shout out to everyone here. What's up? Straight Life, massive bearish divergence on the daily RSI. Fill in the CME gap at 39.5. That's quite possible. We'll look into that as we turn on our oscillators in a minute. We normally do liquidity, math, the three pillars of trading: liquidity, math, and momentum. We did a little bit of a short about it. If you haven't noticed that one, it's over here, basically.
Don't fall for the market makers and the upselling gurus and snake oil salesmen with their outdated strategies and mentorships that are all publicly available. Be your own guru.
This is the three pillars of trading. Liquidity. Have you ever been taught to draw trend lines only to have it go straight for your stop loss, leaving you scratching your head? That's because patterns aren't real. They are traps to induce emotion and liquidity into the charts. Learn to look above and below price action and left for where retracements will occur. Math. With the discovery of the golden ratio by Leonardo Fibonacci in the 12th century, you are only a few clicks away from unlocking price action's hidden beauty. Momentum. Using price action formulas and probabilities across multiple timeframes, the fatigue of price action can insinuate a grander narrative structure shift. Momentum should not be ignored.
Yeah, so that's basically what we do every day, the order of the breakdown. We do the liquidity first with high block. We're looking at some free tools. You can use coinglass.com, and then you can look at some heat maps there. Quite nice. I've found they lined up quite efficiently, and you can go down to the 12-hour and see some pools up here and the amounts. Pretty nice for a free resource. And yeah, after that we go into the math. So that's what we're doing now. We're kind of lining up the math, and then we'll throw in our momentum. And then we'll show you the RSI, the div, and our crystal divergence and all that fun stuff. So yeah, you got the retrace down here at 39 for this impulse to the upside here. We came up to that deviation we came in between that 2.7 and 618 deviation level. Do we come all the way up to the 49K first and then start to make our retrace back down? I have no clue. But yeah, I think it's about time to throw on the indicators though. So let's go ahead. I wouldn't really change the math so far. So Link in the description for more, momentummaster.info. Scroll down to features. This is Bitcoin's bottom, but it's also a schematic for how to look at price action for those reversal points. You got shoulder, head, and shoulder, but basically you got these 6 time frames oversold, rocket ships, reclaiming the cloud, boom! What is the cloud? You can read about each component, the trend cloud, the baselines, the stochastic array, and more. Dynamic alerts come to your phone. Can't ask for more than that. Don't need a guru, don't need signals. You can be your own guru. Now, if we go to the 12 hours, well, actually we're going to start from the 3-day, because this is what we've been talking about, this cross down event. We've been talking about it since December 15th. Does this cross down, we flipped our script when we held that 236. We said we're going to likely come up, and what were we going to likely come up and do? Similar to April of last year, we had to cross down, cross up, cross down, but eventually each cross down plays out in its own right, and this cross down gave you about 14%. Same here, this one was a little bit easier in July. The cross down of the 3-day came down and gave you a good 17% retrace. We had the cross up too alongside our rocket ships in September 11th, continuation in October, and boom, to the upside. So we're getting a cross down event here. So whatever liquidity grab this is this going into that pre-halving retrace? I've been saying it. Do we get a close? We got 23 hours for this candle to close. In the 3-day, it is a stopping volume candle, which is blue on the PVSRA strategy. And sure enough, yes, you are getting a higher high while making a lower high on the money flow, which is a bearish divergence crystal. Once it starts to pivot, if it starts to pivot, then that crystal will lock in. Most likely we'll see this on the daily as well. So you could come down to a 20% retrace down to that 36K. There is a pool of liquidity on the higher time frames for the heat map here, down here, that is possibly on the chopping block at some point for that retrace. I'd expect it to be fast and furious, similar to September 7th, 2021, with the good bullish news sending the catalyst to the downside. So that is just something to keep in the back burner for the 3-day, that everything might be ephemeral in terms of upside. And on the daily time frame, we're talking about this flip of the 236 for the upside play off the cloud kiss. What is the cloud kiss? Well, it's when we return to the cloud here and then kiss the cloud and boom, bang to the upside. This is a place where we like to come back to, gravitate back and retest the cloud. Back tested over 2 years to figure this out. So you don't have to. So coming back into that level, 786 here, rejection potential as we reach this white resistance idea on the daily time frame. Daily time frame also getting stopping volume, blue candles. These blue candles also contain these because the vectors are calculated by the previous 10 candles combined. So it's including these two. So that might be why they're not considered vector. But either way, if there was follow through, it would still be green. So the fact that it's blue is insinuating stopping volume, 75%, I believe, or of the previous 10. I'm not quite sure how that works, like PVSRA strategy percents. You can watch it. It's been a while, but I think it's 200. The vectors are 200% of the previous 10 combined, and I think the blue and pink are, I want to say 75, but it might be 175. I'm pretty sure it's 75% of the previous 10 combined. So it's a stopping volume candle. But yeah, you had bearish divergence here, which gave that Wednesday dump. I was at IKEA. I missed that. I was kicking myself because the nukes appeared on our indicator and I was driving. My wife was not feeling well at the time, so couldn't be helped. So daily time frame cloud is curving in a manner here. What do I mean by that? Well, this normally, if the trend is meant to continue, it's pointing to 2 o'clock. If it starts to taper at 3, trend could be setting up for a reversal path. Although you trade with the cloud on your side, which is why I was saying around here, trade with the cloud, boom, to the upside. We're continuing when you break down out of the cloud, like if you were going like this and you were bearishly retesting here, that would be the higher probability short idea if you were to take it. As you're in this area, you're counter trend trading by shorting, although it is good to position up at the top for a juicy short if it meets other confluence. Coming to the 22 had that nice kiss to the cloud bounce on Monday. We were saying watch out for your shorts, and sure enough, banged higher than expected. And yeah, still on the upside path for the 22 hour. Why do we use 22? Well, candles open in 22 hour, 2 hours, 22 hour, 2 hours, 22 hour, 2 hours. These broken time frames have some fingerprints of the market makers which they cannot disguise, particularly when it comes to stochastic probability resets and getting oversold and overbought. They can't disguise that on these broken time frames. This was back tested by yours truly and co-opted by some YouTubers who claim it as their own. And yeah, the 12 hour is starting to fatigue here as we get below the baselines. What do we mean by below? Well, you see these two lines being above the price. So the price being below the baselines is where you set up for that potential cross down event. They're your first sign of reversal, so when you see this happening, it's potentially downside begin idea. Now this needs to cross down and close with the helix symbol intact, similar to here. This is what we were just talking about on the 3-day. As you see, everything is fractal in nature. Same here, you had the cross up and upside begin. So we've been on this cross up of the 12 hour until now, since basically the end of the year. So this 12 hour cross up had you at hello. Will the cross down begin? Will we come up into this wick and reclaim some of this wickage? We will find out on the next Dragon Ball Z. So you got the money flow beneath the RSI. We were talking about that as an insinuation for subtle support to go to the upside. When the money flow gets beneath the RSI, it likes to gravitate back up to the RSI. This is why we overlay them. It makes sense to juxtapose, and same thing is happening here at the 50 level. Are we getting this insertion of money potentially coming back in for another stab up to the upside on the 12 hour? Watch out for that. If you're in a short, set your stop into profit and pay yourselves. It never hurts. 6 hour time frame is resetting here probability wise, and the money flow coming beneath the RSI also suggestive like it was back here. Back here was where we saw that disparity and that reclaim on Monday. That's why we said watch out for your shorts, and boom, to the upside. So this money flow disparity play we've seen so many times before, and it is something that we use as our confluence path. So the 6 hour is also starting to fatigue on the baselines here. Are we going to get a follow through with the cross down event? You had the cross down print here, but then we pushed up and we are basically showing signs of fatigue as we reach into that zone. Now going to the 4 hour, you have that subtle support of that money flow insertion. So watch out, it's not all lined up for downside at this time. You're getting a lot of wick whacking, trying to fatigue out the shorts before the true short appears. I want to take the true short. I don't want to monitor my trade. I have a meeting to go to today, so I have to dip out early as well. So you have some bearish divergence here on the 4 hour. You see this crystal. This must be the RSI divergence you were talking about, I believe, straight away life. This bearish divergence on the 4 hour already kind of played out. They had a stop hunt and they're coming down. The money flow is coming beneath the RSI here too. So this disparity of this money flow beneath the RSI suggestive of potential push to the upside on the 4 hour time frame. Now the 4 hour time frame cloud has been giving us nice support here, still pointing to that 2 o'clock angle, suggestive of continuation. Trade with the cloud. I always say in the Discord, don't trade against it, so you don't want to be on that other side of the cloud. So it looks like you might be going up into these wicks to reclaim. It is Run for Profit Friday, January 12th. So if we go to this, you do have some pools that are opening up here, so I would be surprised if they let this $71 million character at 45,657 survive. They're giving them a little bit of hopium alongside this 100xer down here, 60 million at 46,173. They are at a loss right now. They opened up at 46,301, 46,430, sorry. So they are at a drawdown, about to get eliminated at 46,173. Don't play with that 100x leverage. You're a hop, skip, and a jump away from getting eliminated and becoming a fatality. And their partner in crime down here, also a nice wick recovery. So they're likely, by the time we finish this, gonna eat that 100x guy and come down to this wick on the Asian session and perhaps gobble up some of these liquidity bands down below. There's a mighty thick amount. We were trading NASDAQ futures and missed the short, but it's all good. There's always another opportunity. 44,146. Let's mark that out. 44,146 has a thick band of liquidity there. So let's look at 44,146 over here. 44,146. Basically down at a daily support level, but we're going to just mark it off like this. Draw a little arrow to draw the attention. There's a pool of liquidity inside these candles, the wicks that we haven't recovered yet, so we could come by down to sweep these off the table. So watch out for that. Baseline cross down on the 4-hour in effect. You're getting ambiguous signals. Cloud not on your side. Once again, the higher probability is like you break through with conviction, come back, bearishly retest, and then go like that. So the higher probability would be the retest of the cloud on the other side of the cloud. But you may not even get that. You might just wick all the way down and destroy all of them. So that's the 4-hour. Remember, you got that curveball of that potential upside too. So overall, I wouldn't be interested in longing at this time until you get a little bit more of a retrace. A lot of these wicks unrecovered. This was a very bullish 2 candles here on the hourly. This was very interesting. We were talking about reclaiming the cloud yesterday. We were talking at the live coming down to the cloud and bursting up. It couldn't have been more picture perfect. We came down to that cloud. The cloud was curving and thinning, and boom, to the upside. This is why it's back tested to be true and why it's not free. So it just proves once again and again and again every day how this, I could predict where Bitcoin was going to be 24 hours later. So where are we going from here? So we got the cross down event of the hourly. So the hourly is suppressing the price here ever since that liquidity grab up here at 49. So we are on the other side of the cloud. So this is what we're talking about. You break through the cloud, and then you haven't technically broken through officially yet, but you are on the other side. So if you come back and bearishly retest, you could be doing that on the hourly. So if you're not getting it on the 4-hour, you could take that cascade and watch that taper of the cloud and see it go to 2 o'clock and fade. And it's the same thing every time. You go like this and take that down. So before we get one-sided, let's look at the signs of hope for upside. The money flow and the RSI at even Steven levels. You had the money flow below below the RSI, as we talked about. Here for that disparity play, you had the money flow beneath the RSI. Boom! Went up to the RSI for that surge up. So that's what you look for in that reinsertion idea. We had it down here too. Boom, boom. Okay. let's go see at the broader markets, and then I got to dip out. I got to get going to a meeting, unfortunately, so I cannot be on for long. Broader markets, total. So total came up and cleared. We had a little bit of a nuke print on total cryptocurrency as it was getting fatigued on all of our key time frames, 7 time frames to be exact. The nukes have been on point. We had that on Wednesday the 3rd, big dump. And then we had it on yesterday, boom, kind of big dump. So this is why this is accurate, and we are also coming into a daily resistance level. This is the $1,792 trillion. I think it was a point of control too, if I'm not mistaken, from this range. If we take a fixed range volume profile, oh no, we already have it, it's there. So that was a little bit lower, but we have a little bit of a profile key zone here that we are off of here. So you reject off of this, you come back down to that profile below. All right, so total 3, how are the alts holding up? We were talking about the alts possibly going higher. They did come up to this region and reclaim the cloud, so you might have some alt season. We are talking about the alts getting a possible play because of Bitcoin's upside, and most notably we were looking at ETH BTC. So ETH BTC got a huge move to the upside. We were seeing those rocket ships down below. Let's see what time frame that locked in on. The rocket ships on the 3rd. As we dumped down, we saw it start to create indecision, and we were like, watch out for ETH. And somebody else asked for ETH as well, but just the concept of everyone taking profits, we were looking at it down here, saying that we could reclaim. What was the time frame we were looking at? Getting that upside pass. So they came to that 25.82 level and basically took out a deviation zone / liquidity pool range, possibly coming to the 27.02. I believe that was what we were talking about yesterday. $27.01 is a deviation level, so we nearly got to that almost exact point. So you could see that come up. Let's go to the dominance. Most of the alts probably played out right now. We were talking about coming down to a key level here with the USDT dominance and wicking off of that. That came exactly true. Coming to that key zone, dominance going down means that people are putting money into trades, and then you got a rocket ship. What do you know? Rocket ship means going up. When it goes up, it means swing play to the other side, which is a play for markets shift in the other direction where people get knocked into USDT. Now this might trigger a liquidity grab double bottom event. You do have a nice wick down there to recover to test it out. If you go to the hourly time frame, that was a nice little key zone level that we came down to. Got those rocket ships in a nice zone too with very minimal drawdown. Could be coming, this could be a breakaway gap, you never know, but it did come back down a little bit here. Whoa. So you could come back into this region. There is an equilibrium play to come back to this. We already kind of wicked into it in the morning here for Asia. Shoulder, head, shoulder, perhaps to the upside in that continuation path to knock traders out. If this is a shallow path, then we are in the shallow pocket, 382, and possibly bullish. Bullish for USDT dominance means knocking people out into USDT, so downside. We're also looking at the potential of a double bottom. Here's your halfway point, And that double bottom idea still being true for the Bitcoin dominance. We came down into a pocket region for this impulse to the upside. So this entire impulse, we're in a golden pocket. If the dominance starts to rise again, this means Bitcoin steals the show. If the USDT dominance wants to go up and dominance wants to go up, that means that people are going to take profits and stay on the sideline in USDT. One thing to watch out for is when the dominance goes up, what is Bitcoin doing? If its dominance is increasing and Bitcoin is decreasing, the alts will dump fast. So be aware of your alts today, perhaps, and most likely it is doing that over at cryptobubbles.net. So you got a few taking off. ETC, SUI, ETH. We were looking at ETH yesterday, so we were on point with that ETH call. I was saying people want to play with their profits in some degen spaces using ETH blockchain, so likely they're going to do ETH BTC and ETH. And that was, we were also looking at Sol, but Sol didn't have as much momentum behind it. We were looking at that 0.5 bounce zone. It did bounce up but faded on that 107 level, and Matic took off a little bit more than that. We were looking at a key range down here off the cloud, boom, to the upside, but ETH was ultimately more bullish than both of those combined. Well, ladies and gents, it looks like we are retracing a little bit lower. We failed the cloud here on the hourly, looking to see if it cascades on down to this point. Do you get a little bit of an acceleration to that 44K region? You got that pool. They most likely eliminated that 100xer while we were talking. Like we said, they came down to that $60 million 100x. Don't 100x people. It's very, very dumb.
Fatality.
And that breakout trader is Dust. And they're partner in crime down here at 45,684. And we marked off the levels down below where it is mighty thick below. So we could see wave acceleration down below to the downside. I'm not interested in longing here. If you caught the short, you know what to do. Protect yourself at all times. Pay yourselves, stop and profit. Perhaps get a little bit of acceleration down to this region at the C wave. And that's my story. I'm sticking to it, folks. So thank you. Oh, thank you, Garadas. Thank you. Love the information. Love the stream theme. Thank you. Yes, sir. Every day. We don't take a day off. So please consider subscribing and come on down. And if you're interested in futures funding, we did reach payout on that, so we are not joking around. Within the Discord, we got an accountability circle going and trade alerts that we did all of our trades yesterday. We had 4 for 4, so got some nice stuff set up for you within that. We also got a free Discord for Momentum Trading Lab. We got some smart money concepts, man from South Africa, Rainier. Shout out to Rainier. If we do this server invite, where's that invite link? Invite. You go channel invite people. So wait, where do you get that? Here. Okay, copy. So we're going to basically post this in the chat. If you want to join up in the free Discord, there you go. Pinned to, let's pin this thing here. Wait. I should put it in the information since it's not going to expire. I'll put that in the information going forward. But either way, join up, say what's up. Looks like we're going to have that C wave down below, clearing out those wicks and these candles to the left. That's my story, and I'm sticking to it, folks. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the accuracy,